Welcome my assets viewers. This time we are going to talk on a very important subject, how to become crorepati by SIP investments. But you know that SIP is a very simplest product, but we know that whenever something is very simple, we have a great idea to make it with more complications. So we are always great on making a simple thing as a more complicated because the choices. Life the moment you have a lot of choices, you will definitely make mistakes. So now we'll see that there are 6 questions we are going to see in the video. I think if the video may run to 12 to 13 minutes plus. If you continue to watch for 12 to 13 minutes, I am sure that with the mutual fund investment of SIP, you can become a crorepati. I have no doubt on that because so much of data have been done. Before we are divulging more information onto that, I like to say thanks to White Oak Mutual Fund because my friend Ashish Omaya is the CEO of that. So he's always, whenever he gets any information, good information, he always shares me. Either it's he read any good book, he send me the book to me, or he shares the name of the book, I'll buy it. Any important study you come across or they do some study in their mutual fund, he is definitely share. He shared one of the latest study about the SIP, just I'm trying to share with you. The first and foremost question, whenever any investor investing in a mutual fund, the first question they all, which days to select for monthly SIP? So this is a question they'll ask. I have to start on 1, 5, 10, 15, 20, 27, 28, or I have to split my SIP into 5-6 portion and start investing. The study clearly says that if you start invested on 1st of every month, okay, you got 15.71%. Okay, and if you invested on 28th of the month, that probably the last Thursday, 28th or last Thursday of the month, which is invariably called F&O expiry date. If you have invested on that particular point, then you could have got 15.68. The worst SIP returns you get between 8th, 9th and 10th. I don't know why it is happening, but it's happening. 8, 9, 10, if you do that, you are getting less returns. But you do SIP any day after 14th, you are always making money. If you do SIP between 1st and 7th, you always making a good returns. So the best is 15.71, the least is 15.62, the average is 15.66. So the next question asks, so because I'm doing that, what much of the impact could be on my returns value? Okay. So assume, for example, you are starting 10,000 rupees SIP over a 10-year period of time, you earn 15.71% return. So you end up somewhere at 28.5 lakhs or something. But same thing if you are 28.72 lakhs, when you do the same thing on that as 15.6%, you earn around 28.54 lakhs. The net difference is 17,500. Please tell me, over a 10-year period of time, does this 17,500 is going to make a great difference? Because you are creating a wealth close to 28-29 lakhs. So my conclusion is this, but the best date for SIP is that the day you have a balance in your bank. That's the best day, because if first day is giving a better return, you try to time the first. Unfortunately, your salary or something is not getting credited on first, what you will do? You will get into trouble. So my conclusion is that select any day which of your choice where you have a comfortable credit with your bank. Next question people are asking is that, sir, which type of frequency I need to select to do an SIP? If I do a daily, monthly, weekly or monthly, where I give a great return? So it's a valid question, because we know that equity market is have a lot of volatility. So if I try to do invest on daily, probably I'll get a better average. This the mind says, but the study says completely different picture. If you try to do a daily, you get 14.5%. If you try to do weekly, you get 14.5%. And if you do a monthly, also 14.5%, because the amount variation in the end value is small difference. It's coming at the fractionals. But the in valuation, if you look at it, if you do a daily value, okay, from 1996 to 2023, that's what the study period they have taken. You would have made a daily SIP of 1,000 rupees for the entire amount, you would have contributed 16.56 lakhs. That value could be 16.74. And if you do on a weekly, the value is 16.76. If you do monthly, it is 16.77. That means if you have done on every 15th of every month, you would have got a higher return. So why you want to break head that I have to do daily, weekly or monthly? So that doesn't make any difference at all. Because if you look at it daily and assume you hypothetically are doing a daily, you would have got 16.7 crore. 16.74 crore. If you do on monthly, you would have got 16.76. I'll tell you one more secret out of this. Instead of doing this daily, you would have parked your money in SB account. You would have earned some money return on SB account. That money could have also added to your income and you would have made more money also. So that end of the study says that it is clearly that running SIP for long term is the greatest winner, not that daily, weekly or monthly. So then the third question, my people will ask me, sometimes it's very strange, because people will come with all type of different questions. They ask, sir, instead of doing a daily or automated SIP mode, I will decide whenever market is low, the entire money I will invest on that particular day. Please tell me, over 10-20 years of time, is it anybody can be so accurate that this particular day market will be lowest of the month? In hindsight, you can able to say that, because end of the month you can say that 12th is was the lowest, but every month cannot be 12th will be lowest, will be 13, 15, 20, 25, 18, whatever that number could have been there. Assume somebody thought I can able to identify this particular day of the month, the index is going to be low, that particular day going to invest. So that guy could have earned 14.8%. And another gentleman who he doesn't bother, he always invest at the peak of the month. That index value will be peak that particular day, you will earn 14.2%. Another investor, very, very sober investor, he knows that making money is a long-term game. I need not do a lot of harakari like that. I'll invest every 15th of the month, I'll make the investment. He could have earned 14.5%. So 14.8, if you try to time the market, you are not doing any timing, you are doing a routine, you are going to do is 14.5. So what is the conclusion? It is there. It is the time in the market is greater than the timing in the markets. So that is the conclusion of that. That's what the study says that. Another question, it's a very important question. Lot of people will be definitely would have asked this question several times to yourself. You could have asked to your advisor or distributor several times. Sir, SIP I have to do it in a large cap, mid cap or small cap. Definitely this question comes most of the time. We always say that do an asset allocation invested, but still investors are very crazed to know that which gives you. We'll see that and I'll give the verdict afterwards. Because if you do a SIP on a large cap, over a period of time, you know that if you do a 10 years of period of time, the rolling return they have taken for a 10-year period of time, 100% of the time you made a profit, and that is also after 10% return and above, 10% plus 91% of the time you got 10% button returns. If you are doing 12% return, you got 65% of the time, and then 15% of the time you got 7%. Same time in a mid cap, if you have done stayed invested for 100% on 10 years time, if it is going to be 10% above, it is 97% of the time, 12% means you would have got 95% of the time, and 15% about 74% of the time. Similarly, in a mid cap, you are doing SIP for 10 years of time, 99% of the time you got a positive return. Okay, only 1% of time it is given a negative returns, and 10% above it is given 84% of the time, and 12% is 74%, and 15% above 43%. What is the interesting study it throws? If somebody is doing a mid cap over a period of time, 10 years of time or 15 years of time, they got more return than a small cap. So what is this conclusion? It says that the long term SIP through any of the mode has given a favorable return, but you want to be more specific, if you invested only in mid cap, it could be great. So this conclusion says the winner is a mid cap. So if you do a mid cap, you got a great return. And another question people will always ask a question is that, what is the time horizon I have to stay invested in SIP? So this is very valid, paramount, because the long term for somebody could be 3 years, for somebody it could be 5 years, somebody for 8 years, somebody could be 15-20 years. So there is no clear definition for long term or a time horizon for anybody. Okay. For this study, what has been taken is that 3 years, 5 years, 8 years, 12 years and 15 years. That 6 frequency have been taken, and then from there it is worked out. If you look at it, if you do an SIP for 10 years and above, 100% of the time you got a positive return, and 8% return and above is got 94% of the time, 10% of return you got 81% of the time, and above 12% it is 67%. And similarly the results, as you increase the tenor, the bandwidth is increasing. 8 years is like this. When you go to 10 years time, if both are 100, instead of 8% it is 94%, it is there in 15 years, 99% of the time you got 8% above returns. And if it is 10% return, it is 97%, whereas for 8 years it is 87%. 81%, whereas for 12% above, 90% of your 15 years SIP has given 12% above, whereas in 8 years it is given 64%. That means it's clearly through that longer the SIP you got a greater return, but minimum I think criteria if you keep 8 years you are making a very good favorable return. And the last and final question which always people ask is that what will happen when I start investing in market and when market is bad I'll stop. I'll start when market is good, I'll stop. When again market goes good, I'll start investing. When market is bad, I'll stop. So we look at it in the study, it clearly shows that when you take a 5-year period, first 5-year period where SIP return, majority of time is only 88% above, is around, it's close to around 91% of the time. If you stop 5 years and then stop, again stop, that means you are getting 91% of time you are only getting 8% return. But when you are continuing over a period of time, you are getting a greater return. So that means if we cannot, when market goes bad, you are not supposed to stop. We saw that in February and January, February, March, market was really bad. A lot of people have thought my SIP returns are not giving, even a 2-year SIP return is not given, it's all single digit. People got frustrated, they stopped. You know what happened the last 3 months time? The SIP returns have given a fabulous return, they compensated for whatever the loss. So that clearly shows, that tells you a fact, this. A slow start is always a good start, rather than try to do too much of handling your portfolio is not helping out. So my conclusion on this, all this is that whatever you want to start and doing it for over a period of time, you need to have 4 parameters in your mind, rest you completely ignore it. What is this? One is a financial goal, another is start early and invest regularly and invest for long term. If you follow these simple 4 principles, you definitely become crorepati by investing in mutual funds. You start 1,000, 10,000, 15,000, whatever it is. If you do 10,000 rupees for 10 years, it is 28.7 lakhs. Assume you are doing 20 years, it will be, even with 10,000 rupees, I am telling about 10,000 rupees in 20 years time, it will be 56 lakhs. And if you do this under 30 years time, you will become a crorepati. So it's a 10,000 rupees is making you to this much level. So your life doesn't go like this. As your life is getting increased, your earnings are getting increased, you are going to increase. So become crorepati is not a big deal. What you need is a patience and follow the 4 principles which we discussed. If you do that, definitely you can also make good return with the mutual fund. Mutual fund is one of the best avenue to build wealth for over a longer period of time. So please do that. You can definitely feel the benefit of this. This is Suresh Parsadi, Certified Financial Planner and founder of MyAssetsUnderConsolidation.com, signing off. We have put a lot of videos, most 146, 147 videos is there. Of late we started to come in a two language. One is in Tamil, my mother tongue. Another is in English. So if you are English, you see that. If you are comfortable with mother tongue also, if it is being a Tamil is your mother tongue, please come to Tamil videos also. So if you are a first time subscriber to my channel, please subscribe to my channel. And we are inching towards 15,000 subscribers. And our views, you know that we have more than 4 lakhs views for our videos. And between 3 lakhs, 50,000, 4 lakhs, we jumped very short period of time. In less than a month's time, month and a half time, we have crossed 4 lakhs views in our videos. So please, if you like the video, give a like, and if you want to share this video, please share with your friends. We'll see in some other video. Bye till then.